Solutions webinar. Ever wondered why your NextGen reports don't match? Again, happy Halloween, and my name's Chelsea Grover, and I'm the Marketing Communications Coordinator for Attentive. I'd like to take a moment to explain the process for today's presentation. First, I'd like to mention this webinar will be recorded. We'll be sending out a copy of the slides and recording within the next week, so keep your eyes up for that. Next, for those of you who aren't familiar with Attentive, I wanted to share a bit of who we are with you. We specialize specifically in NextGen healthcare, and we're passionate about providing solutions for our healthcare provider partners, which in turn help them to improve patient care, enhance the patient experience, and to maintain a financially healthy practice. To sum it up, we do everything NextGen. And we also have two add-on productivity solutions for NextGen, ChartGuard and Refund Manager. Next, I wanted to mention that we're excited to be sponsoring the NextGen User Group Meeting in Nashville from November 11th through the 14th. We're going to have a huge booth there. A bunch of our team members, including all of us presenting on the webinar today, will be there, and we'll also be making an exciting announcement and look forward to seeing many of you there. Please make sure to seek us out and say hello when and if you're there, and make sure to scan your badge or booth for a chance to win some great prizes. We're going to be at booth 603, so please stop by and say hello. Okay, so back to today's webinar on balancing reports in NextGen. At the end of the presentation, we'll open the floor up to questions from you. We'll answer all the questions at the end, but you may type them in the questions area of the webinar control panel whenever they occur to you. And finally, for audio clarity purposes, everyone's phone will remain muted throughout the entire webinar. If you experience audio issues, please use the chat box to let us know so we can resolve them. And again, questions may be entered in the questions box. So without further delay, I'd like to introduce our presenters for today. Cindy Kincaid is Vice President of Client Solutions, Lindsay Lanning is our Healthcare Compliance Consultant, and Mercedes Mowers is Managing Consultant at Attentive, and she'll be available to help with questions at the end. So Lindsay, the webinar is all yours. Feel free to get started when you're ready.
Great, thank you, Chelsea. Well, hi everyone, welcome. Thank you for joining us for our webinar on balancing reports in NextGen PM. Now, I know I can't see all of you like I would in a traditional in-person presentation, but if it were one, I would start by asking, by a show of hands, how many of you have ever wondered why your NextGen reports don't match? I would expect a good majority of hands to go up since, well, that's the title of our presentation today. But not only that, we've been hearing from clients for some time now that they find themselves running report after report in NextGen, and their totals never seem to match when they expect them to. So at Attentive, we understand this frustration when it comes to balancing reports in NextGen. We took the time to investigate these discrepancies for you. We will review which reports should match and also examine unique instances where reports may not. We really want to provide you with helpful hints we discovered on why reports may not balance and steps to take to avoid this irritation as well. So get ready as we address balancing reports in NextGen and solve the mystery of comparing data for an accurate analysis. And may I just point out how fitting for it to be Halloween as we cover such a scary topic that haunts many of our clients. So specifically on today's agenda, you'll see there are no more corny Halloween jokes from me. However, we are going to start with report basics. And while I know some of you on the call may be very familiar with running reports and all the capabilities with filters and sorting and grouping, we found there's always something new to learn when it comes to filters and all the very specific date types that we're going to go through. We will then go over the reports that should balance, providing some background on the report and all the other reports that should match to it. And finally, we will look at how to troubleshoot balancing issues using key tactics that our own managing consultants use when assisting a client. In this section, we will be going over tips and tricks provided by our consulting team based on real-life scenarios they have encountered, as well as best practices moving forward. So let's go ahead and get started with the report basics. First, by looking at report filters. Reports in NextGen PM have several configurable filter options displayed in that settings list on the left side of the report filter window. The tabs available will differ for each type of report. And depending on the report selected, these filter options actually allow users to do a number of things. Either select the columns to be included on the report and control the order in which they display, specify a date or date range for the data on the report, filter the desired data to be included or excluded on the report, and also set parameters to define how items are sorted, grouped, and totaled. The first option displayed in the settings list on the left side of the report filter window is columns. PM reports have default columns already selected to display on the report, but columns can be added or removed from a report by checking or unchecking the column name on this tab. The order that the columns appear in the report filter window, top to bottom, is how they will display on the report left to right. And if you want to reorder these columns, all you have to do is highlight the desired column row, click that single blue arrow to move the selected column up or down one position at a time, or that double blue arrow actually jumps that selected row to the top or very bottom. Moving on to the Filter 1 tab. The Filter 1 tab is primarily used to define the date range by which data will be included on the report. You can see on the screenshot you have several different date types, including create date, actual appointment date, as well as several different appointment statuses. So for example, if on an appointment listing report, the Filter 1 appointment statuses dropdown is configured to include only the no-show status, only appointments marked as no-show will be returned on the report. I really want to stress here, nothing will impact your ability to balance across several reports more than if the date filters on the Filter 1 tab are different. This is extremely important. Other options found on Filter 1 vary by report. Think encounter status or charge type, appointment status, include, exclude unapplied credits, aging dates, etc., and can be used to either include or exclude certain data accordingly. We also have Filter 2 right under Filter 1 in that settings list. The Filter 2 tab contains a listing of several of the available columns on the report, and each column listed can actually be filtered by between, equals or not equals, greater than and less than, and also like. And this allows users to define data that will be included on the report. For example, if the self-pay balance column is set to greater than $100 on Filter 2, only data that meets the criteria will be returned on that report. So only patient balances greater than $100 is going to be included on that report. Now, in addition to Filter 1 and Filter 2, additional filters are available as tabs on that left-hand side of the report filter window. The options that will be available are dependent upon the report. However, they all function the same way. Data will only be returned on the report if it meets the criteria on all the filters. So if, for example, data meets the criteria on Filter 1 and Filter 2, but it does not meet the additional tab filters, it will not be included on the report. Believe me, I know most of you are sitting there thinking, well, that seems pretty obvious, Lindsay, that's how filters work. And I know the concept is easy to understand, but I can't tell you how many users run into issues balancing because of filters being used. It is easily the #1 reason why reports don't balance. So while these are the basics, they are important. Next up is totals. The totals tab on the report filter window allows users to count, sum, average, and obtain subtotals for the data returned on a report. This tab displays a list of all available columns offered by the report, which means multiple columns can be totaled if they are appropriate for totaling. So please note, not all data columns can be summed or counted or averaged. For example, patient names can't be averaged or summed. Also, the totals column is not always the same as the count column. The counts column actually counts the number of line items on the report, whereas the totals column sums the values of those line items. Again, it's the tiny differences, like between totals and count, that can cause a report discrepancy. The old saying that we have, the devil is in the details, wholeheartedly applies to these report settings. Now, if we look at sorting and grouping reports, we know data returned on reports can be organized by sorting it in ascending or descending order. The data returned can also be grouped together. And grouping data columns allows for subtotal calculations. Multiple sorting and grouping options are available, and this can be done on the sorting tab in that report filter window, which will contain a list of all the available columns offered by that report. This means each column on the report can be sorted and grouped as you desire, and those little blue arrow icons are used to actually order the priority of the sorting and grouping in the same way that we've talked about before. The order that the columns are arranged from top to bottom actually dictates in which order the data will be sorted or grouped. And then most PM reports are configured with default sorting and grouping, typically by provider and location. The sorting tab should be reviewed and modifications made as desired prior to generating the report. So just another area to check before you actually generate that report. Switching gears here a bit out of the settings list on the report filter window and looking at the logic behind the reports. Each report created from the reports menu on the NextGen PM main toolbar has a category. And each category displayed lists several reports. And each report often uses a different logic for extracting that data for you. For instance, many of the reports can be run to include multiple enterprises and/or practices, although some reports, such as a scheduling report, can only include one practice at a time. So different logics on how it's actually pulling the data for you. First, we have daily reports. These reports can be run with full detail. That means they have drill down functionality, which allows the user to actually double click on a row of data on that report, and they can directly access the patient related to that data. Then you have monthly reports. These reports can be run with summarized data. They don't have that drill down functionality. The reports actually summarize data to the lowest common denominator. In other words, selecting fewer columns will provide a shorter, more summarized report. Many of the daily and monthly reports have actually two available options, running them either by encounter or by line item. And these options relate to how the financial class and payer information logic works on the report. So if we ran a report by encounter, all charges and transactions are attributed to the primary payer on the encounter. So for example, we have a patient encounter and it has Medicare as the primary and Blue Cross as the secondary. All charges and transactions will be reported under Medicare. In contrast, if we ran a report by line item, all charges are attributed to the primary payer on the counter, and all transactions are attributed to the actual payer. So in that same example, if a patient has an encounter and Medicare is the primary and Blue Cross is the secondary, the Medicare payments will be reported under Medicare and the Blue Cross payments will report under Blue Cross. The next topic we will look at are going to be the report dates. This is what we will end our report basics section with, but I will warn you there are quite a few definitions and slides and some do overlap. I want to go over each of them because, as I mentioned before, the devil is in the details, and this can trip a lot of people up when you're setting your filters. Not to mention, when we send the slide deck out, this will be a really nice reference sheet for you to have to look back at. So we're going to start off with charge dates. Charges in NextGen PM have 3 dates associated to them: the create date, the service date, and process date. The create date is captured during charge posting for each line item and reflects the date the charge was entered on the charge posting window. This date should be equal to the current system date and it can't be modified. The service date is captured during charge posting for each line item and reflects the date the service was actually rendered. The date should default to the charge posting window from the billable date field on the encounter maintenance window. This date can actually be modified either before or after the practice closing process. And then lastly, the process date. The process date is captured during the practice's closing process. For auto close, the date will be the same as the current system date. And then for manual close, the date will be the current process date displayed on the practice closing window unless the process date was overridden or backdated. In either case, the date can't be modified after the closing process is run. But go ahead, Cindy.
And I want to clarify a point of confusion. The closing process, this is NextGen's terminology, but there's no magical program that you run that says, oh, everything is closed today. This is largely manual. You can do some things in your practice preferences to say that, you know, the process date can't be modified after the such and such calendar date or create date. So you have some controls there, but this is largely a manual process. So this is one of the areas that I think people find the most confusing, and we'll talk a little bit more about this as we get into some of the balancing aspects of this. I just wanted to mention it right now in case we get the largest number of questions in my mind is, well, what's my end of month process? And the process is really your process. So we'll talk more about that as we go through the webinar.
Perfect. Thanks, Cindy, for chiming in. Feel free if you have any other clarifications you think would be helpful to hop back in anytime. So let's actually see these dates and their significance in action. I thought this might help kind of visualize instead of just looking at a bunch of words on a slide. So hopefully to keep you with me throughout these next few slides and remind you why these definitions are important. So in this example, we have a 99203 visit charge. On the screenshot in the upper left-hand corner, you can see the service date is highlighted and shows August 29th, while the process date shows August 31st. And if we look at the next screenshot to the right, you can see for that same visit charge, the create date was September 3rd. Now, if we look towards the bottom, we see the report filter window. As a user, if I was trying to run a report based on the date filters I have set right now with process date and create date both set for all of August, these reports will not balance. And that's because the create date shows September 3rd when the charge was actually entered on the charge posting window, whereas the process date shows August 31st. So while I understand going through these definitions may not be the most interesting thing in the world, they play a big role in understanding why your reports may not match. Moving on to transaction dates. Transactions, which I want to remind everyone include payments, adjustments, and refunds in NextGen PM, have 3 dates associated with them: the transaction date, post date, and process date again. The transaction date is captured during payment entry. It defaults from the default date selected in the batch maintenance window by the user that created the transaction batch. This date actually can be modified before the batch is posted. However, it cannot be modified after the batch has been posted. The post date is captured when the transaction batch is actually posted. This should just be equal to the current system date, and it can't be modified. And then lastly, we have this process date again with a very similar definition. And again, Cindy had mentioned that that closing process is going to be unique for each practice. We do have a special note here for the process date for automatic adjustment transactions. And this is actually dealing with certain postings when you have a contract linked to the patient's insurance that's set up in file maintenance to automatically adjust charges, same with the sliding fee schedule. So this is just, that little blue box is just showing you one of our kind of pro tips here to have as a reference. So I know that's a lot of information for you. That's why we included all that detail on the slide. So you can go back and reread this in its entirety and digest it, but definitely some important details to keep in mind that will affect your filters. The next kind of dates we will look at are going to be the encounter dates. The encounter date is captured when an encounter is created, obviously, and reflects the date the patient was seen. If the encounter is created from the appointment book, check-in process, the date defaults from the appointment date. If it's created from the chart, the date defaults to the current system date. In either case, you can always modify that. But one type of encounter date is actually the first bill date. The first bill date is captured when the encounter status changes from unbilled to billed and reflects the date the encounter was first billed. So this happens when the encounter successfully passes all claim edits during the billing process for the first time. And conversely, the last bill date. The last bill date is captured each time an encounter is billed and reflects the date the encounter was last billed. So again, this happens when the encounter successfully passes all claim edits during each billing process. We also have other dates such as onset date, admit discharge date. We also had patient responsibility date. These all fall into this category, but they aren't as important when you're running reports as the 2 we went over. I did want to make sure you were aware we left those out on purpose to try and cut down on the amount of date definitions we were throwing at you today. But those are available too if you needed those. But on to our last and final category of dates. I'm sure everyone's happy about that before we actually get into the troubleshooting process and looking at which reports balance are going to be our aging dates. The create date is first. So aging will be based on the charge create date, which is again captured during charge posting for each line item and reflects the date the charge was entered on the charge posting window. Then we have the date of the patient responsibility. Aging for this is going to be based on the encounter patient responsibility date, which is captured when all remaining charge line item balances on an encounter have been settled to the patient amount bucket within the balance control window. So the insurance 1 amount, insurance 2 amount, and insurance 3 amount buckets must be $0. Then date of service. Aging will be based on the charge service date, which is captured during charge posting for each line item and reflects the date the service was rendered. And then we have encounter date. So aging will be based on the encounter date, which is captured when an encounter is actually created. And our last slide, rounding up the rest of the aging dates, include first bill date. Aging is going to be based on that encounter first bill date, which we just went over. Very similar last bill date. Aging is going to be based on that last bill date, which we went over. I'll spare you the duplicate definition here. And then process date. The aging will be based on the charge process date, which is captured during that unique process closing for your practice. And then last but not least, the statement aging date. Aging is going to be based on the charge statement aging date, which is captured when the charge is entered into NextGen PM. However, I do want to point out this date cannot be modified, but the date will be reset when one of the following occurs. Either an acceptable payment is posted based on settings and practice preferences statements, or a charge line item balances are shifted between buckets on the patient control, or excuse me, on the balance control window. All right, I know that was a lot of information, not only a lot of information, but very detailed information to spring on you on a Wednesday over lunch, but I promise it only gets better from here. Next, we're gonna go ahead and look at reports that balance and then how to troubleshoot them if they don't, which I think is why the majority of you are on this call, but I hope you were able to at least take 1 to 2 takeaways from the report basics, even if you are a NextGen report veteran. And if you aren't, I hope that section helped provide a foundation on where to look for troubleshooting issues we discuss later on. So I'm going to go ahead and turn it over to Cindy to take it from here.
All right. So thank you, Lindsay. That was great information, and it kind of provides a nice segue into this. What we thought we would start about before we troubleshoot is tell you the reports that should balance, because not all reports in NextGen are even intended to balance to each other. And that's an important distinction. So we're going to talk about those reports that right out of the bat, as long as you've set things up properly, should balance. So let's move to that. So why do we want our reports to balance? Well, those pesky accountants and financial teams will always want the reports to balance, not just between each other, but to the bank, to the numbers, to the fee tickets, whatever your processes are. It's a double check to ensure that the numbers are correct and that you are getting all of the information entered into the system and achieving the financial numbers that you hope to obtain. In NextGen, it can be difficult to know which reports balance and which ones are static, which ones are not, etc. So we're going to talk a little bit about that as we move through these slides. First of all, let's talk about the aging analysis by encounter. It's an encounters-based report. It's run only by process date or the as of date. And this is the one we talked about earlier, that the process date is the date that you actually put in the charge or the date that you backdate to if you have security options to do that. Unapplied transactions will show unless they are specifically excluded. Important to remember that because that's not the case with all reports. Filter 1, as of date, uses charges closing date, so encounter totals does not use all charges. So that's important to say. The closing date is basically, if you're in a manual close, what date have you specified as your process date and your closing date. So some charges might be excluded if the charges were entered on different days, like the example Lindsay provided, or if some payments were already made prior to the as of date. Again, important to note your dates and important to make sure that you're all on the same page in terms of what your particular period of closing is. If all encounter statuses are included in filter 1, the report will then balance, and that's also important. All your encounter statuses must be included in filter 1. The report then will balance to the monthly changes in AR, the insurance aging analysis from collections, the insurance detail from collections, the insurance summary from collections, and when running a bad debt only report, you must exclude the unapplied transactions. That's just kind of a side note in terms of the aging analysis by encounter. The aging analysis by line item, similar report, it's charge-based encounters. It has some encounter-based columns. It runs only by process date. The unapplied transactions will show unless specifically excluded. And if everything is selected, as we talked about before, it will also balance to the monthly changes in AR, the collections insurance aging analysis, the collections insurance detail, collections insurance summary, and the same bad debt only report option must exclude unapplied transactions if you want to include that. Moving on to the receivable analysis by age, month, and type. This is based on process date of charges. When using this report to evaluate bad debt balances, unapplied credits should also be excluded in filter 1. You always want to keep that in mind to keep those out of there. And you have to do that because they're inherently included in these reports when you bring them up. To balance to other reports, the process date ranges should be the same. So if you're looking at other reports, you want to make sure that those process date ranges are always identical when you're running those. The total outstanding AR from this report should balance to the total outstanding AR. Now that's also important to note because these are columns on the report. But if you're looking at the total outstanding AR, they should balance to the monthly changes in AR report total, the insurance aging analysis report if all charge statuses are selected, and the aging analysis report if all charge statuses are also selected. So those reports should be able to cross-put to each other if you have made sure that you have selected all the proper filters and statuses. The activity detail report, which is one of the reports that I find is very, very useful. This returns all charges within the filtered date range and all transactions within the filtered date range. This tells you pretty much everything that occurred during the time frame that you're running it for. The charges and transactions are totally separate and unrelated unless you select the option in filter 1 to associate the transactions to charges. Very important because that's not always done and it's not always understood. Selecting that option will limit the transactions that are returned to only those associated with a charge in the charge date range. So for example, you have a charge that occurs on, we're in October on Halloween, so we had a charge that occurred on October 1st. We have received the payment for that charge, and that came in on October the 14th from Blue Cross. We received that, it's been applied. That's going to be within the same date range. But we have also sent out a statement, and perhaps tomorrow there will be a payment come in on, so that's a self-pay because there was a balance that was owed by the patient. That would not be included if we associate the transactions. However, if they occurred in the same date range or we received a payment, a better way to say this is, let's say we received a payment on October 31st that applied to a September charge. If we don't select associate transactions, that September charge payment would be included in the activity detail. It's a lot to explain without a visual, but that kind of gives you the idea, I hope, of how you can make these reports work for what you're looking for. The charge column should balance to the daily charges report. That's also important because that's only the charge column because transactions have a lot of other aspects. If you want the transactions to balance to the respective daily by line item, by encounter, by transaction, payment, and adjustment type reports, you have to be sure that you've selected the appropriate ranges when you're looking at these transactions. So that's where that associate transactions to charges can come in to impact the way this report works and balances to others. Daily by line item, transaction, encounter for adjustments, payments, and refunds. This returns one line for each line item posted within the transaction. In order for this to balance or match to the daily activity report, the user will need to run with the same filters. We're back to those filters again. That really is inherently what all of these are about. This will also balance to the monthly changes in AR report if it's ran by the same process date filter. The daily charges report is another one that I think is very helpful, and it's, it specifies daily, but this can be ran for a number of things. And when you're looking for a number of, trying to filter down and see some of the activities that you have going on, you can run this for a number of date ranges. So don't focus too much on the daily word in many of these reports. This shows the charges by service item, And depending on filter 1 options, voided charges can be included or excluded. Important to note, because if you have voided your charges, they may not show on another one, but if you include them in this, it can skew your numbers depending upon what you're looking for. The count column is the quantity per charge, which gives the total number of units for all charges. The Count Records option on the Total tab will count the number of lines on the report and not the total charges. This is very important because we have spent sometimes hours tracking down why some of these reports are running different totals and they're not equating to others, and a lot of times it will be between this Count column and the Count Records column. And particularly if you're doing any sorting by that, and we don't have the tab here, but this is something that can be really, really tricky to find if you're looking for something that's not balancing. If everything is set up properly and you've got the right filters, this will balance to the monthly changes in AR, the transaction summary, the practice summary, the service item summary, and the provider productivity by RVU. Charges by current user. This shows all charges for current user regardless of location. And this balances to the daily charges report if that report is ran only for the current user as the creator. So you, again, got to make those filters become in sync, but if you're looking for something in a balancing by perhaps a batch, or you're looking for something in a user that maybe is in a wrong batch, or they're working in different locations, number of uses for this report. But again, the importance of making your filters match is the only way these are going to be balanced and to be helpful. The monthly changes in AR primary payer. This displays charges under the primary payer financial class on the encounter. It's important to note the monthly changes in AR by line item report displays the payer financial class chosen on the payment entry screen. This runs by process date. And the from and to dates are explained by the beginning AR is the data from date less than the from date. The charges amount, payment amount, adjustment amount, and refund amount data from dates between from and to date. And the ending AR is the sum of all data. So this basically, if you're getting all of your filters right and you run this from month to month to month, in theory, this should be able to take you and allow you to balance to month to month. The balances in the following reports, if this balances to the following reports, if you include all statuses when appropriate, the daily charges, the daily payments, daily adjustments, daily refunds, insurance aging, practice summary, aging categories by encounter, aging categories by line item, collections insurance detail, and collections insurance. It's important to note, though, when you're balancing to another AR report retrospectively, you must include encounters in a history and bad debt status on the other AR report. If you're overriding the process date of your charges and or transactions, remember that the aged accounts receivable report are charge-based. So if the charge does not appear in the time period being reported on the aging report, then none of the associated transactions will appear on those reports. So all of these, again, I'm sure if I, again, ask for hands to be raised, how many times you've ran a report and then you run it a week later and the numbers have changed. That's a consistent challenge within NextGen because some of these are not static reports. So again, when you're running these reports and you're trying to get more of a history status, there's a couple of things you can do. Make sure you're including history status. Make sure you're including bad debt status because that changes throughout the time as you're processing those particular areas. And if you're not wanting to go to all this effort associated with it because the reports are still accurate, they're just not giving you a retrospective view. Now there is also the snapshots functionality within NextGen where you can take a snapshot of the report so you can kind of preserve it in time, for lack of a better word. Productivity by RVU. This allows for charges to report under the primary payer financial class on the encounter. This does not include unapplied payments. So going back to some of the earlier reports that do, once again, this would explain the discrepancy. The charge amounts balance to, and again, charge amounts to the daily charges, monthly service item summary with extended amount transactions, and the monthly transaction summary. Transaction amounts are not intended to balance to other reports because this is really looking at things from a different perspective, and they're just not intended. So if you're looking for that, it won't happen. The service item summary with extended amount and transactions. All charges and transactions are tracked to the primary payer on the encounter. All transactions are tracked back to the original charge. Unapplied credits do not appear on this report because they are not associated with a service item. Therefore, it is not recommended that this is used to balance transactions. This is really to give you an idea of the service items and the payments associated to that service item. When the same filtering criteria is used, the charge column will balance to the daily charges, activity detail, and monthly change in AR reports. Again, the transactions are not intended to be used as a balancing report. Transactions by encounter summary. Charges and transactions display under the primary payer financial class on the encounter. Charges are reported based on the dates specified in filter 1. Transactions are reported based on the dates specified in filter 1, regardless of when the associated charge was processed. Important distinction. This is looking at your encounters more from the transactions perspective. When the same filtering criteria is used, this report balances to daily charges, daily adjustments, payments, and refunds, and the monthly change in AR. Transactions by line item summary. Charges display under the primary payer financial class on the encounter. Transactions will display under the actual payer financial class from the transactions. Charges are reported based on the dates specified in filter 1. Transactions are reported based on the dates specified in filter 1, regardless of when the associated charge was processed. When the same filtering criteria is used, this report will balance to daily charges, daily adjustments, payments, and refunds, and monthly change in AR. So before we move on to troubleshooting balancing issues, I just wanted to point out a couple of things as we were talking about the reports. It's difficult when you're not looking at the individual reports themselves, so you're just hearing a lot of data. But the important thing to keep in mind as we go through this is that every one of these reports can be very powerful if you know how to use them. And when you look at these and you think about what you're trying to accomplish, what you're trying to look at, that will eventually help you learn which reports are useful for just that balancing to the bank and balancing to your charges, as opposed to looking at analytically what you're paying your providers or what your productivities are, where you can find your holes, what procedure codes you're using. So it's really important, in addition to just understanding what they do and how they balance, is to understand why you might want to run those reports. And that's probably a separate topic, but I did want to at least mention that. So as we move on to troubleshooting balancing issues, one of the things that we always encounter when we first start a consult, particularly when it's an AR consult, is being able to go in, and we get this question a lot, these reports just don't balance. So let's look at some of the troubleshooting basics that we've learned and also follow NextGen best practices. If you're having trouble balancing, I want to start. I don't want to say that this is a blanket statement to not use memorized reports, because memorized reports are frankly a lifesaver to all of us. But when you can't get a report to balance and you've tried everything, run the report from scratch. Do not use the memorized version. Those can get corrupt. They can get changed, and sometimes they have to be deleted and resaved. So that's important. Report filters. Basically, check all the report filter tabs to ensure that data is consistently being included or excluded in all reports, including that total filter. Because I got to tell you that you don't think about that doing anything, but it can. It can actually create some exclusions if you accidentally get some of the group buys checked. Check statuses. Check to make certain that if you're generating an aging report for a previous date range, that you have all visit statuses checked, because they don't always inherently include all of them. You may not think to go to there. And then date filtering. When you're balancing multiple reports, confirm the date filter on the Filter 1 tab is consistent on each report. For example, create date, service date, process date, transaction date, and posting date. All of those can skew your report even if the transaction occurred in the same month. So if we look at charge-based versus as-of monthly reports, most of your NextGen PM reports are charge-based, which means that if a charge isn't on the report, the associated transaction won't appear either. So that's important to note because going back to that example that I gave, if you have a charge that occurs on October 15th and you get a payment on November 1st, if you're looking at the charge base and November is not included from a transaction perspective, that charge will still be at a full amount, but the transaction won't be included. So it's really important, just keep that in mind, that they are basically charge-based. There are a few that you can backtrack, but that's the general consensus within NextGen. So when you're looking at a charge-based report, the Filter 1 tab will have date fields related to charges and transactions. Most AR reports only have one date filter, which is a process date, and are considered as of date. So as of means if you're looking at a process date, it is as of that date you're choosing, not necessarily as of today. The monthly changes in AR report is another area that we get a lot of questions on. It only runs by process date, so you don't have a lot of flexibility here when it comes to that. If you use the same process date for another report, the charges will balance, but that's all. And so there's an expectation many times that you run these reports and you're using the same process date, but your transactions are all over the place. Why? The reason is because monthly changes in AR returns all process charges and transactions, even those transactions that are not entered on the included charges. So think about that same example that I have. If you're running the monthly changes in AR and you're using the process date, it's going to return that payment that occurred in the month because it's charge-based, so it may not have been entered on those included charges. So again, two reports going to give you different in areas, and they weren't intended to balance. So don't make yourself crazy or think something's wrong. Just find the other reports that are intended to balance that you can use in your reconciliation process if that's what you're trying to do. If you're trying to run any AR report that you want it to balance to the monthly changes in AR report, it needs to also be ran by process date. The charge process date and batch process date. The charge process date and batch process date override. So check the security to override the process date on charges and or transactions and to make certain that all staff who need to override a process date have the security to do so and understand when to use an override. So when would you use a charge process override? Well, typically groups that we work with, and it varies from size, some groups are very, very, matter of fact, we close on the 1st. If the charge isn't in on the 1st, I don't care if the provider is walking around with cards in his pocket, he hasn't done his rounds, he hasn't turned in his surgery slips, whatever the reason may be, they're going to close on the 1st, and that makes this less important. But other groups really want to have a true reflection of what occurred in the month, so therefore they will say, we're going to close our books on the 5th. So between the 1st and the 5th, we're going to override the process date for any charges that occurred in the previous month to the 31st or the 30th, notwithstanding, and that's going to be your charge process date. Now, you can put a limit in the system to say, and by the 5th, that can't happen anymore. If we're in an encounter date or if we're in a charge create date, it's locked down. You can't do that anymore. So we're going to make it the 5th. But it's important to keep in mind that that's how you could get in the service date of, say, the 31st, a process date manually overridden to the 31st, and then a create date of the 4th or the 5th or whatever day you're doing. So this is really important to make sure that you keep this in sync and understand that everyone who's doing this, because that goes back to what I said earlier, there's no magic bullet for this. This is really something that you just have to have your policies and make sure that everyone adheres to them. And just here's an example of where you can set the process date override. So you can go in and you can, first of all, in practice preferences, under general options, you can select the auto closing. Then you can go down to processes, and then you can override the process date, and you can put in the minimum override process date, and that's the date you choose. And then that's basically how you can set that from month to month and being able to somewhat control this. And I want to use the term somewhat because it is all inherent in everyone understanding it, and that the people that have the ability to do this have the rights to do it, and frankly, again, need to understand the impact of if a mistake is made here. Encounter status. Depending on the reports to be balanced, it may be necessary to include encounters in a bad debt or in a history status. This is particularly necessary if you're trying to balance reports from a previous financial period. If you're going to try to look at AR in the past, you have to include all statuses, history and bad debt. When balancing aging reports to the monthly change in accounts receivable, all encounter statuses must be selected in order to balance. And the monthly and changes in AR includes all statuses. Aging reports do not by default. Because aging reports traditionally are not used as balancing reports. They can be, but you just have to make sure that you've made all the modifications to incorporate them. Unapplied could be included. The service item summary report will not balance to a monthly change in AR report because the service item summary report does not report unapplied transactions. You can exclude or include unapplied on many of the reports, and this will report on many reports, and this will cause reports not to balance. This is probably the biggest area in terms of being able to understand your AR, is not just including them on the reports, but understanding the impact of unapplied versus an encounter unapplied, an account unapplied, and then also making sure that you include or exclude them on the reports as needed. Bad debt only reports. Okay, here's another area where exclude unapplied credits. When generating reports that show bad debt only, an example, receivable analysis by type, exclude unapplied credits from filter 1. Included all is defaulted. So you want to make sure that if you're running this for bad debt only, you exclude this. Unapplied credits report are the payments column of the report for accounts receivable, even when only bad debt status is filtered on filter 1. Because if you don't, this causes the bad debt totals to be falsely reduced. Because basically, the bad debt may be out there. You might have an unapplied. If it's on the account, and it could be for a copay, it could be for a future visit, it could be for an encounter, depending on what your bad debt rules are. So therefore, it's going to default to include, and if you default it to include, your bad debt totals will be less than what they actually are. So important note. If you're running anything by line item versus encounter, this determines how financial class payer data displays. Some reports look at rendering provider and location by charge line item, and others look at rendering provider and location by encounter. Now, some would say those are always going to be the same, but that's not exactly the case. So you want to be sure when you're looking at reports, and for example, reports, accounts receivable, aging analysis by encounter and by line item. As I said, you think you'd run these two reports are the same, but it might not be because there are circumstances where you have a supervising provider in one place and you might have different resources on the line items. Not every practice does this, but there are some out there, so it's very important. If you're running a line item report, say line item in the name and make sure you look at the info button included on the report. It's really just important to keep those separate. Aging analysis versus insurance aging analysis. Again, similar situation. Aging analysis returns data from the primary payer financial class. Insurance aging analysis returns data from the current responsible payer financial class. So here's an example. Aging analysis may say Medicare owes you $100, but that may not be the case because Medicare may have been primary, Blue Cross may have been secondary, so you may have gotten your $80, I'm going to keep this real simple, you may have gotten $80 from Medicare, so now 20 is sitting with Blue Cross, but if you run the insurance aging analysis, it's going to show you who is currently responsible. And it's a charge-based permit. So if the true payer balance, if you want to see the true payer balance, you want to run AR collections insurance aging analysis report because you don't want to still see it showing as Medicare when you've got that $20 now sitting with Blue Cross. This shows you how much each payer actually owes, and you must, again, include all statuses and unapplied credits. Insurance aging analysis, recreating AR from prior periods. This is a common, something that everyone attempts, and it's also a common area where this can be a challenge. AR can be recreated from prior time frames in order to run on payer aging, to report on payer aging from previous months and to obtain a previous bottom line AR. However, and that's in capitals, however, responsible party balances cannot be reproduced from a prior period. So what happens when you try to do that? You will simply run the report and you may get your grand total right, but your buckets will be all over the place. So that's kind of, again, just keeping that in mind if you're trying to do it. That's where that snapshot comes into play, or if you want to export your reports and save them for historical purposes, that's probably a better choice in terms of if that's something your accounting department or your financial department is going to need. Charges currently in a history status, in example, no current balance owed, will report under the patient column on the report as well. So if you're including history and there's no balance owed, it's going to report under the patient column because there's no insurance associated with it. Encounter versus invoice. I don't know if we have anyone using invoices on the call. I have a couple of clients that we've worked with that do, and they're treated very differently. So charges entered on encounters and charges entered on invoices report differently on various reports. You want to check that both encounters and invoices are included on each report in order to make sure that your totals are all inclusive. Auto adjustments. Again, some people are using this, some don't, some it's not be applicable to all of you, but if you're utilizing auto adjustments from contracts and sliding fee schedules, the auto adjustments are marked with the process date of the day they're created. So whenever it's created, that's the process date. If the charge has a process date overwritten to a prior financial period, so keep this in mind, you've got that same scenario, provider comes in with a charge was missed, they didn't get the charges coming over from EHR, they're running behind, lots of reasons. If the charge has a process date that is prior to the financial period you're in, and the charge and the auto adjustment is created when you do it because it goes automatically within the process date of when you're running it, then what is going to happen is these will not be reported in the same period. There's not a lot you can do about that. So it's just, that's a strategy that you need to keep in mind when using this functionality. Many of the reports, including the accounts receivable reports, are charge-based. We talked about that earlier. So this means that if the charge is not on the report, then the adjustments attached to that charge will also not appear on the report, even if it's in that period. Data integrity and validation reports. These are the kind of the sneaky little reports that no one thinks about. But if you have the data integrity and validation reports, these are ran to tell you, sometimes you're running these reports or you're running reports and there is no reason whatsoever that you're not balancing. There are certain errors on these reports that specifically will tell you when you're running them. Excuse me. This will affect reporting. However, some of these errors can be self-corrected and generated prior to month end in case they are errors that support needs to be handling. So these should be run at least monthly. They can be part of your weekly maintenance jobs, and many of our clients run them weekly and always after hours. Finally, just need to get some water. Finally, the report data sources. If there's an issue with your report and you're not sure what to do or you're not sure how to track it down, you can look at the report data sources and it'll tell you where the data is being pulled from. So if you're trying to balance reports against each other and you really want to dig into it, you need to make sure the basis of the reports are the same. In other words, don't be trying to turn an apple into an orange because that could take all your time and you'll never make it happen anyway. So for example, if you run an encounter level report, it will not balance to another report that is based on line item detail because the data being captured is from different sources in the system. So moving on to best practices. Well, I mean, you've heard a lot of information. Some of it was probably pretty mundane and not very exciting, so we tried our best. But let's move on to best practices, and it's pretty simple. You want to run your reports from scratch if they're not balancing. Don't rely on the memorized reports because they can get corrupt. They're great if you're not having any issues. Check and double check your filters. This is probably the largest reason for not balancing of anything. Use the information button on the report to understand what is pulling. because it's really important. Again, don't try to, again, I use oranges and apples. We'll do the round peg in a square hole, or however you want to look at it. It's not going to match if it's not intended to. And remember, there's a difference between encounter reports and line item reports, as well as charge-based and as-of reports. The bottom line, when you're trying to balance reports to each other, they need to have the same filter criteria and be intended to balance. So let's talk about next steps. So if you're uncertain where your practice stands, let iTentive help. We can help by assessing your current readiness, providing recommendations, and implementation of new processes and procedures. You can visit us at iTentive.com. You can sign up for our informative webinars and blogs. You can consider one of our 3-day fixed price on-site consultations, which include revenue cycle and front office, and you can test our products. In addition, we are going to be incorporating an AR management series very similar to our macro series that we will be introducing at UGM, so keep a lookout for those products as well, or services as we like to call them. So now we'll open it up to questions.
Great. Thank you so much, Cindy, and thank you, Lindsay. Again, questions may be entered in the questions area of the webinar control panel. We only have 2, so if you have any, now's your time to ask them, and we'll be happy to answer them. So first question, why wouldn't the insurance aging analysis age responsible balance only report balance to the insurance aging analysis report if all my criteria is the same?
I can take
Mercedes?
that. Yeah. The info button is not very good at explaining the difference between those 2 reports because they look like they should really be exactly the same. Your insurance aging analysis button, when you set your criteria, if I want to look at September, and so I set my date to, as a previous month end September, then I see and I check my history and my bad debt. I see what my total AR amount is. When I do the age responsible balance only report, even if I set that previous month end as of September 30th, it is going to pull in payments as up to the day I run the report. So on that age responsible balance only report, I will see my current AR because any payments posted in October are going to show.
Perfect. Thank you very much for that, Mercedes. And next question, looks like this is a Lindsay question. Can you all please have a webinar to discuss how relevant reports based on quality measures, i.e. depression screens, tobacco, diabetes, etc.?
That sounds good to me. We're always looking for some
webinar
webinar topics. Yeah,
that sounds like a good one.
I love to hear feedback from clients on webinar topics, and it's a bonus for me when they incorporate some form of MIPS or quality reporting.
We all know Lindsay loves. She loves the quality reporting.
Okay, we got another question. On the aging by financial responsible report, or I'm sorry, on the aging by final responsible report, the column totals down, but the lines don't total across. Why?
Can you tell me which report they're looking at again?
The aging by final responsible report.
Okay.
I think that's financial. I think
that's probably financial.
Talking.
Oh,
sorry.
Yes.
I think that's.
All right.
I think that's what we were.
Yeah,
go ahead,
the age
Mercedes.
responsible. Because like on that age responsible only or balances only report, one CPT is going to be listed out multiple times if there are amounts sitting in different buckets. So if a 99213 has an amount of $80 sitting out to Insurance One and $20 out to the patient, you're going to see that line 2 times on the report. It's going to show under a responsible balance under Insurance One for 80, and it'll show down under the self-pay amount for 20, which is why they recommend that you never total the line item amount for that report because it'll be artificially inflated. The responsible balance amount is the correct amount.
Awesome. Thank you for that clarification, Mercedes. It looks like that's all the questions we have, but you can see we have Cindy, Lindsay's, and Mercedes' information up on the screen. Feel free to reach out to them if you think of any questions after the fact. We're really happy to help. Or you can always reply back to the email that I'll be sending out within the next week with a link to the recording and slides. Oh, we got another question. If I run an AR report with the same filtering criteria, why wouldn't the beginning balance from one month be the same as the ending balance from the previous month?
Okay, it depends. AR reports are not generally meant to balance that way because sometimes your information is not static. To really make sure that like your system is in balance, the monthly changes in AR report is really the best report to go by. And because again, sometimes the transactions go with the charges and they won't show on a report even if they fall within the same date range.
Right, so it's going to change. Everyone, thank you very much. I have got to jump off. I've got another call, but I let Mercedes and everyone, but thank you all for attending, and I hope to see you on a future webinar or at UGM.
Yes, definitely. Come by and see us at UGM. We're excited to share some new information with you. We can always answer your questions in person at UGM too and even walk you through it, so please come and say hello to us. And happy Halloween again. Don't have too much sugar tonight, or I guess tonight's the night to have too much sugar, so whatever you want to do. Thank you all very much, and thank you, Lindsay, Cindy, and Mercedes.
Thank you, Chelsea.
Thanks.